Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at a question which seems to be increasingly posed by a lot of investors out there. Have we triple topped and have we come to the end of the bull market? And as per usual, we'll have a look at the wider markets to make sense of the current Bitcoin price with a detailed analysis of the 60-day cycle. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And before I get into the main part of the video, I just want to clarify one thing. In last week's video, I was talking about the pi cycle and the settings for the green line and the red line. As you can see here are 111 simple moving average and 350 simple moving average. And I misspoke saying that this was the 150 simple moving average instead of the 111. So just to confirm, the green line of the pi cycle top is always 111, not 150 simple moving average. And as you can see, these two lines have not crossed yet, which is what we expect at the end of a bull market. And this is also relevant to the current question I'm posing, that have we triple topped? And as I showed you in last week's video, that all of the previous peaks always occurred when the green line crossed over the red line. And as you can see quite clearly, we have some way to go. Okay, so why am I asking the question that have we triple topped and whether we've come to the end of the bull market? A triple top simply means that we have come to the top 3 times. And the recent fall in the Bitcoin price from 73,000 down to 64,000 has led many people to think that we have now triple topped here, now that we've come to the neckline around the 69,000. So this is the question that's being posed over the last few days as Bitcoin has had a correction down to 64,000. And as you can see here, the Bitcoin traders are dismissing triple top. And I want to show you this quotation that if you don't have a plan, you will surely experience paralyzing emotions and second guess yourself at key decision-making moments. This is the word, key decision-making moments. And these are key decision-making moments at these points where people think this is a triple top, and many people have actually sold thinking that this is a triple top and that the market is going to now fall from there. And that is all because people don't have a long-term plan. And because they don't have a firm plan, they make irrational decisions. And I want to refer everybody to this particular quote, that the only person who can stop you from reaching your goals is you. So people who don't have a plan of what they're supposed to be doing and following the market, they will come to these points and see stories about triple tops, and the emotions and not knowing how the markets work will make them make decisions that they will regret later on. So the only person who can stop you is yourself. So the question is, why is this not a triple top? The evidence is in the charts. We can see quite clearly on the monthly time frame here that this is a cycle that's been going up for the last 15 years. So in the first cycle, when we came to this point, that was a double top from this price level. And many people thought this was a double top and lost out here. But look what happened. We went on to make a higher high. And at this point, people thought this was a double top from this price level. And we went on to make a new higher high. And at this point, at the 20,000, people thought this was a double top. I remember all the articles about a double top at this point, back in 2020, that was a double top to the 20,000 high here in 2017. But once again, we went and made a higher high twice over. So the same stories are now coming out, this time obviously because we had a double top there. People are now talking of this as a triple top. But as I will show you on the lower time frames, this is exactly what happens every time we reach a neckline like this. So if we move to the daily chart, and you'll see that what is currently happening at the daily chart here at the 69,000 is exactly what happened at the 20,000 and at the 1170 level here and at the $31 mark at this point. So this is the first cycle when we came to the double top at this point. And when we look closely at the price action here, quite clearly we got rejected with this green candle with a long wick at the top, meaning people took profits at this point. And whenever you get to a neckline, you see all these long wicks either at the bottom or at the top. So this is quite a regular pattern whenever you come up to a neckline, where you see a lot of indecision, people taking profits, and opportunist investors buying up at the little dips here. before the big move to the upside. In the second cycle, this top here, when we came to it, we can see quite clearly we had a big rejection at this point. We made a second attempt and had another rejection there. We had a fake out and another rejection before we went to the moon there. And a close examination of that second cycle, we can see right at the neckline here, we can see that the first rejection was right at that line there, at the 1177 where the market had topped previously. And from there, we got a correction of around 36%. Then we made another attempt at this point and got a correction, having had a fake out, of another 32%. And it was at the third go here that we actually went and broke that neckline. So in the first two cycles, we can see it was the same characteristics, getting rejected here, having a little bit of a pullback, and then eventually breaking out to the next bull market high. And in the third cycle, the top here in 2017, when we came up to retest that, we'll have a closer look at exactly what happened there. So we got a first rejection, a second rejection, and on the third go, we went straight to the top of the bull market at that point. So the same thing happened 3 cycles in a row. And in terms of the corrections, we got a 16-17% correction first time and an 11% correction the second time before breaking the neckline here. And that brings us to the current cycle at the 69,000 previous high. This is the price action we've been getting in the last week or so. And if we have a quick close up on this, close view of what's happened here, we can see quite clearly that this is very familiar territory from the previous 3 cycles. We've had an initial rejection right at the 69 here, which is about 13%. And currently we're having another 12% correction here. So based on the historical perspective, we can quite safely say that this is not a triple top and is part and parcel of the characteristics of whenever we come up to a previous all-time high, this is how the market behaves in each of those situations. So for those people who are worrying about a triple top and trying to get out of the market at the time when the smart investors are trying to get in and buy up their Bitcoin, they would do well to understand a little bit of what's happened historically and the mechanisms of how the market works, especially at these situations of previous all-time highs. People need to understand that markets are driven by retail investors in the parabolic phase of each cycle. So the retail investors usually enter when it gets all over the media at this point. So when we break the previous all-time highs, and that's when the retail investors, the majority of those people who are buying out there, will get to know the news. And then they come on board here, here, or right at the top here. And it's the same thing that repeats over and over again. And we are waiting for the retail investors. And you may well have seen that on the YouTube, all YouTube views on Bitcoin have increased by at least 2, 3, and 4 times the normal amounts of views. And that is the same with my channel as well. So we can see that the retail investors have now started to trickle in here. So that's more evidence that we've still got the long, big move to come yet. And people are questioning that we are already halfway to the Bitcoin euphoria, and they're asking, are the retail investors here yet? And as I showed you this article a few videos ago, from February the 22nd, retail investors were likely behind the crypto market rally in February. So the retail investors have just started to enter the market, and you don't get a market top like this without retail interest to drive it up there. That's where the greed takes everybody before topping out at the top of the market. So if you look at the psychology of a market cycle, we've already been through the disbelief phase where people were not willing to get on the Bitcoin train. This is when you need to get in low and get in hard. But very few people get in at this point because they believe that this rally at this point here going up will fail like the others. That's the psychology. So at this point, people were waiting for a 12,000 Bitcoin, 8,000, 3,000, etc. But the market did not give it to them. So when people saw this rising here, as had happened before, whenever we had a rise, we had a fall. So people expected a fall from here, which the market didn't give us, and went even higher. So people's psychology here was that at least we'll get a big pullback here to get back on the train. But this is what the market does. And it's at this point that people get optimistic that this rally is real, by which time you're halfway up the bull market. So at that point, people with optimism that this really is a bull market start to wait for any dips or any little corrections. But then what you see is a faster progression of the bull market. And increasingly more people start to get fully invested as the market starts to rise. And this is where the retail investors get in, when everybody tries to tell everybody else to get in on the market and make the big bucks. So this is when the media starts to cover the big move that's been going on with Bitcoin. So those people who get on at this point, which is currently where we are at the breaking of the previous all-time high, so they will get this increase at this point, and people will feel like a genius. So the secret, as I've mentioned many times, is knowing when to get off. It's having the exit indicators, and we've all missed the tops in the past. And every investor that I know, every trader that I know have missed these points themselves, and we have to learn from that and make sure that the exit indicators that we have will guide us to get out at this top here. We'll never get the exact top, but to try and get as close to the near top as possible. While those who get on at the top at these points here will unfortunately ride the market all the way down. And the other main reason we know that we haven't topped out on a triple top is that we have the little matter of the ETFs, and spot Bitcoin ETFs are predicted to have a $220 billion of inflows in the next 3 years. That's what's been predicted. And we can see the inflows over the last 7 days when we've been having a correction. The evidence of the inflows into the ETFs is continuing at record levels. So while Grayscale had outflows of 20,000 over the last 7 days, the BlackRock ETF had inflows of 34,000, more than negating the Grayscale outflows. And Fidelity added another 9,000 on top of that, whereas ARK added another nearly 3,000 here, etc. So you can see that the inflows are still at record levels, and that does not give any signs of a triple top happening with Bitcoin anytime soon. So we can see quite clearly that the answer to the question, have we tripled out? Have we come to the end of this bull market? The answer is a firm no at the moment, and only time will tell. And I just want to give you a final quote on this, and to answer the question of why people sell out at these points. It's obviously to shake out the weak hands, because it's unfortunately not the market that beats them. They actually beat themselves. And while everybody has brains, they unfortunately cannot sit tight. Being patient with the market is the biggest challenge that people will have, especially in the parabolic phase of a bull market. And this quotation is from Jesse Livermore, one of the greatest traders of all time. And he also said that money is made by sitting, i.e. being patient, doing nothing. It's not made by trading, getting in and out of the market. And I think most people would do well to heed that advice from one of the greatest traders of all time. Okay, so moving on to the wider markets, I'm going to have a look at the SPX. And on the weekly time frame, what we got last week was an indecision candle at the top of a bull market, and Friday's close here was a gravestone doji candle. And as I've been showing you on the dollars chart, when you get this kind of a candle with a long wick at the top with a small body at the bottom, that usually spells with a high degree of probability for the market to move to the downside. So I would expect over the next few weeks for there to be downward pressure. And if we have a look at the 60-day cycle with the SPX, and as we looked with this candle here, a gravestone doji candle on the daily chart, and I mentioned it at the time that we can expect some bearish pressure to the downside here. But we went eventually to make a higher high from that point. Then we got this bearish red engulfing candle here, which, as we said, was a reversal candle, and we should be seeing some pressure to the downside, as well as seeing a lot of red candles at this point compared to what we were seeing over here. So these are little signs when the market is either topping out or having some sort of a short-term correction. And we've got our 60-day cycle end here. So we would expect for the market to come back into that 60-day cycle before resetting the oscillators and the indicators for the move to the next level. Moving on to gold, we can see we're waiting for a retest of this neckline here. So when we get to this point, we can expect a bounce back to the upside. This is looking incredibly bullish. And if we have a look at the monthly chart, we can see that if we close above this neckline on the monthly, that will be our very strong signal that we're moving to the higher side. So we could well have a very strong bull market for gold over the next 12 months. And if we move on to silver, we can see there is an inverse head and shoulders pattern forming at this neckline, which I've shown you many times on other charts. And we're seeing another move to breaking these necklines very shortly. So we're now on the 5th attempt to break this neckline, and with a high probability we're going to see silver break through this time around. And if we have a look at the dollar, so we can see we've broken through the blue line, the 8 EMA on the weekly chart. We've come back up to retest it as resistance, and I would now expect for dollar to move further to the downside. So the dollar, being the inverse of the wider markets, has shown a little bit of strength to get back up to the blue line here. And we may actually go sideways here while the other markets like the SPX have a little bit of a correction before they move to the upside and the dollar moves to the downside. And if we do break above the blue line, which is obviously a possibility, if you do a Fibonacci retracement from the top here to the bottom, you'll see that it will face a strong resistance at the 61.8 at this point at 104. So if we do recapture the 8 EMA, we can expect a fall to take place, a correction back to the downside here. And the dollar rising a little bit further up would make sense for the wider markets to catch up and reset the oscillators and the indicators. So overall, what we can see is the dollar rising may be in the short term. That's always a possibility. And while the wider markets are just pulling back a little bit to refuel for a sustained continuation of the upward march. So how does that all fit in with Bitcoin? So here's the 69,000 neckline, this white line here, and we've had a very strong sustained move to the upside from the $25,000 mark down here. And what we have is an indecision candle, this red candle with a wick at the top and a wick at the bottom. Now most people think this is a bearish candle at the top of a trend, and obviously it can be that, but with the body of the candle in the middle, this suggests it's a pause candle, i.e. indecision, but it's a pause before the move to the higher side. The body of the candle being down here would have been a different candle completely. That would have been telling you with a higher probability for the move to the downside. But as it is, this is a pause at the top, just like we had over here and over here and over here. And we may well have an extended period of a few weeks going sideways while the 8 EMA catches up here. And as we've seen, it's bounced off there several occasions now. So nothing to be worrying about if the price starts going sideways. This is not a sign that it's going to have a big correction. Of course it can do that, but the higher probability is for a continuation of this move to the upside. Okay, moving on to the Bitcoin 60-day cycle, trying to make head or tail about what's happening with the price as per this template of the 60-day cycle. Currently, we are on day 55. So we're coming to the end of the 60-day cycle here. And as we would expect, coming to the end of the cycles, we expect a 60-day low coming up before resetting for a move to the upside. There was an opportunity for Bitcoin to continue up to the 82, 83,000 before coming back down, but it started the pullback into the 60-day cycle at this point, which is absolutely fine. So what we're really waiting for here now is a bottoming out of this 60-day cycle. This is the level to watch at 64,500. If we break that level, then this is where you would find a lot of strong support at this point, as there was a big bounce back from that level, which is at 59,300. So I would suspect over the next few days for this to come back down either to this level and reset to go back up, or a further fall down to the $59,000 level before we go back up again. So these are the things to look out for at this point. So the current fall that we've had from the 73,000 is around about 12%. And all through 2023 and in 2024, we've had only up to 20% as the biggest falls so far. And faced with these small corrections, it's not really a smart move for people to lose their positions with a view to buying back at lower levels. And of course we can go down to the 59.58. That would give us a 20% fall, which has been par for the course for the last year or so, but the probability of that is not really on your side. And as I've said many times, it is riskier to be out of the market than in the market. And anybody waiting for lower prices down here will find themselves with a higher probability of being disappointed. Considering that we're coming to the end of that cycle, we could get one big flash crash down, which could take it to over the 20%, even come back down to this level. But the probability doesn't seem to be on people's side for that. And if you look at the weekly chart and the 8 EMA, once we went above the 8 EMA here, about 6 months ago, we've only really tested it once before. So a retest of that would make sense. And currently that's at 59,000. But if we go sideways for a while, then this will come up at much higher prices. So it may well be that we bide our time until we hit the 8 EMA before making a move to the upside. So my advice to myself at these points here, when we see some red candles and people thinking that we may well have topped out or come to a triple top, etc., my advice to myself would always be, if I had Bitcoin, which I don't, but if I had Bitcoin, I would not be panic selling here. But unfortunately, many people have been panic selling and losing their positions. But those people who have been through many bull markets and bear markets will know that in the parabolic phase of a market, the market has a habit of punishing traders, i.e. people trying to sell a little bit at the top with a view to buying back at the bottom and trying to swing trade the parabolic moves. The market has a habit of punishing those people, and it rewards people who hold on to them, i.e. sit tight, be patient. So this is the advice I give to myself. I'm very happy to be holding my position in the Bitcoin miners. And this price action on the monthly chart seems to resemble the blow-off tops that we've had at the end of the bull markets previously. So just like here, we have quite a way to go, and the best thing is to actually sit it out and capture all of the move up here. So from a strategic point of view, the number one rule in parabolic phases of the bull market, i.e. where we are to where we expect it to go, is to maintain the long-term positions. And rule number two is to try and buy up at the dips. Wherever you get a little bit of a dip, that's the time to buy, and not wait for bigger falls, which the market will simply not give you. And what I would say is that the current correction that we're having here is very much part of a healthy move, that when we get these types of consolidations, they provide the support to move much higher. So I would expect some sort of a consolidation being a very good thing before we move to the upside here. And this to me seems the last chance to actually accumulate and consolidate a position before we get to the end of the parabolic move here. But many people will miss that, waiting for lower prices. For those people who feel they've missed out on this big move here, I just want to provide one comparison, that when we broke the 20,000 previous all-time high of 2017 at this point in 2020, Bitcoin went up from this point to its 69,000 about 2.5x. From the same point in the middle of December 2020, which was about here, Marathon, one of the Bitcoin miners, went up by 15x. So you can see there was a leverage play by the Bitcoin miners over the Bitcoin price. And currently what we've got with the Bitcoin miners is a correction of around about 50%. So they're providing a very good opportunity that before we get to the halving and to the end of this bull market here, which we expect at the end of 2024, the Bitcoin miners seem to be presenting a much better opportunity on a leverage play than Bitcoin itself. Here at Wisdom Bites, we do run a private member section which covers just the Bitcoin miners. But always be aware that the Bitcoin miners are a very high volatility play. They go up and down by 50-60% and are not for the faint-hearted. But if that's something that's of interest to you and you're interested in the opportunity just to observe or to participate, then you can join us by clicking the join button below any of my videos. Okay, so I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so, and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.